Hey guys, in this video I'm going to share with you an Ask Me Anything session covering 30 of the most common questions traders ask when it comes to picking a broker. I'm talking from the very basics such as what does a broker do and why do we need one, to the more in-depth conversations such as what is leverage and what are some red flags to look for when spotting a scammy broker. In case you don't want to hang out for the entire session, I'll throw a rundown of the questions asked in the description box below. That way you can jump to your favorite one. And as you know, I don't have any professional affiliations with any brokers or anything like that, but I do like to affiliate myself with good people whose goals are aligned with mine as far as changing the perception of what trading really is and kind of getting rid of the scamminess that is out there. And I can tell you full-heartedly that Ben has the same goals as mine. So I hope you guys enjoy, and please share this video with anyone else that you think might find the information useful.
Firstly, my name is Ben.clay. I'm the partners manager here at Blueberry Markets, which is an Australian broker. So a Forex broker, of course. We deal in Forex, commodities, metals, stocks as well. As a broker, our role essentially is to be the middleman to the market and to be able to offer liquidity and sizes from micro lots all the way up to millions in terms of notional value. So basically, clients can trade directly with the broker through our MetaTrader platform or MT5, MT4, whichever platform you prefer. And we basically give access to the markets. It's as simple as that. And we offer customer service, the liquidity, and the tech side of things. Yes, and as Akil did say, so I'm sorry I'm a little bit slow. It is 3 a.m. here in Sydney. So I wanted to come in at this time so I could make sure that I could speak to everyone. Myself, I've been in the markets for about 11 years now. I started at Axie Trader, which is there was about 5 people working there when I started, and they now have over 100 people. But I moved away from them as they went into a different direction that I wasn't too keen on. But we started Blueberry Markets about 4 years ago to try and change the perception of how brokers are seen and how the Forex markets are seen. Because obviously there's a lot of bad brokers out there, but there's also a lot of very good brokers. So I want to go over a little bit, especially for the people who are new and haven't had any experience with brokers, to the questions that you should ask your broker when you're signing up, the things that you should look for, what to steer clear of, the kind of research that you can do. So any questions on this, please feel free to ask. But I think, in my opinion, one of the most important things nowadays to look at when looking for a broker is their online reputation and their regulation. So firstly, online reputation, there's endless forums now that you can go on and find out any information about your broker. Jump onto Forex Peace Army, jump onto Trustpilot, jump on Google reviews, and really do your research and find out who's behind the broker and who are the directors if you really want to get granular and work out as much info as you can about the broker. And secondly is looking at their regulation. So you'll see a lot of brokers that are regulated and only have regulation in places like St. Vincent and the Grenadines or the Bahamas. If they only have regulation in these places, then they tend to be a lot more laxed in those regions. So your protection, your client funds, it's not going to be the same type of level as if you were to have a broker that is regulated in the UK or the US or here in Australia or Singapore. So these are very, very important things to look at when you are looking for a broker. And there was actually a video that Jason did a little while ago, Jason Graystone, that I saw, where he was basically calling up brokers and asking questions, checking their customer service. And this was an awesome video, and I love to see this type of thing. This is something that you should do before you go to any broker, is call them up, find out how they handle service, ask them the kind of questions that are the hard-hitting questions. How safe are my funds? How does your pricing model work? Do you make a market? Do you run a dealing desk? These are the there's the video there that Jason popped in. Great video. I hope if he ends up calling Blueberry Markets, that one of my best guys is on the phone when he does call through. but these kind of things are really what's important when it comes to trying to find a broker. I saw someone asked, unfortunately, you can't use blueberry markets in the US. That's due to the Dodd-Frank laws that came out quite some time ago. But that's something that's very hard to get around. But if you have an address outside the US, then yes, that's absolutely fine to sign up with blueberry. We accept most countries around the world. Dubai, absolutely fine. I can see there. That's no worries at all. One thing I wanted to touch on, which is I think there's a lot of misconceptions in the markets about how pricing works, and clients or brokers being on the other side of trades. And we're very, very honest about how things work at blueberry markets, and sometimes if you lose on a trade, we are going to profit from that. There's no secrets behind that. There's always someone on the other side of your trade, no matter where you're trading, whether it's the broker or the liquidity providers. But the important thing here to ask your broker is whether those prices are direct from their liquidity providers. So in other words, we have 5 or 6 liquidity providers that provide us pricing at any time, and we would take the best aggregated price from those 6 providers. So say if we get one bank is sending us a bid price and then another bank is sending us the ask price, those prices will be as close together as possible, and that's going to be the price that you enter on. There's no manipulation. We don't have the ability to change the price. Those prices are just direct from our liquidity providers and will be passed directly through to the MT4 platform. And this is how most brokers will operate. It's not just us. A lot of the big brokers will operate in this way. But if they are running a dealing desk model, then there's the ability for essentially someone to be sitting there denying trades, or even an algorithm or a computer denying trades because the price, has moved against the broker. So prices can be slipped. You can get massive spread blowouts. So again, these are the type of questions that you really, really want to ask your broker, and really delve deep into how they offer their trading pricing, and how they also manage their risk and what they do on that side of things. So I'd be interested to see if there's any questions about this, or any questions about reaching out to brokers, and what kind of questions to ask, and what to look for. That's what I'm here for. So shoot any questions that you might have through on that regard. Is there any questions around what to look for when reaching out to a broker, or is there any questions on the way that pricing works, or anything that you want to know about brokers behind the scenes? Because as I said, at Blueberry, we've had a very open and honest policy about how we do our pricing, and I think that's what gave the Forex industry such a bad perception in the past, is there were so many brokers doing very, very unhonest things, so to speak. So 11 years ago, when I started, it was all about the spread. Brokers were just competing on spreads. Then it moved to regulation, and now it's basically just online reviews. So here we go. How do reputable brokers make their money? So it's really varied. So a lot of the time it's in the spread, but if we are the counterparty to trades, it can be, say for example, you're short 1 lot the euro. You can guarantee that there's another client that's long 1 lot the euro. So a lot of the time with your database, and how many clients we have, we have thousands of active traders. A lot of the time those positions are netting each other off. So we might make the money on slight differences in prices of where clients close those trades. Do I believe in stop hunting? Well, it's a real thing, that's for sure. It's not, I don't know if it's something to believe in or not. It's definitely out there, and I believe that people will. There are still brokers who will definitely do that type of stuff, but that again comes down to regulation. If you're trading with an ASIC regulated broker here in Australia, or an FCA broker here in Australia, in the UK, then they technically shouldn't be doing those things. Otherwise, that would be shut down quite quickly. So anytime that, it's happened to me many times when I'm trading, I see my stop loss hit and it doesn't look like the market goes there, but I'll check with the broker. I'll call them and say, hey, can you please show me how this price reached there? And if they show me the liquidity provider's price reached it, then hey, that's how it happens. Sometimes spreads blow out, and sometimes, there's low liquidity in the markets, and that's what happens. The prices are further apart. So again, that's another very important question to make sure that you ask your broker. What happens if a broker goes under? That's another good question. So again, that comes to regulation. Here in Australia, we have to keep all client funds in segregated accounts. So that basically means that they're separate to our everyday business operations. So if something's happened to Blueberry, all the client funds are left separate and untouched, and we can't use them to cover staff wages, client losses, anything along those lines. Those client funds can't be used for. So if you're trading with a regulated broker and they go under, your funds should still be available. If they're not regulated, then you can basically say no to those funds. They're not going to be given back to you. Can you explain the difference between ECN and STP brokers? So Blueberry is essentially an STP broker, which is just straight through processing. ECN is a term that gets thrown around probably a little too much these days. All it stands for is Electronic Communications Network, but the typical term in Forex means that you're using multiple liquidity providers and multiple brokers to get pricing from. So you're sharing those prices, and you might be filled with a broker, you might be filled with a bank, but typically there's the person on the other side of the trade is just going to be whoever that LP or whoever the broker is that actually takes that trade. Okay, Johnny says, I recently took a trade not realizing the spreads had expanded and it skewed my risk reward. Yes, we do have floating spreads. And that's, if you're trading with a broker that has fixed spreads, then you can pretty much guarantee that they're making a market, or that every time they're going to be on the other side of the trade, which is, again, it's not always a bad thing. If the prices are not being manipulated, then it doesn't matter who's on the other side of your trade. As long as you're getting good fills and the prices are not being manipulated, then you really have nothing to worry about. How are overnight rollover costs calculated? That's a good question. Overnight rollover costs are based on interest payments. So at the moment across the world, interest rates are very low due to the pandemic. So a lot of the currency pairs that you would trade at the moment, say Aussie versus the US, you might actually pay interest rates on either side, whether you're long or short. But when there's a big variance, if Australia has high interest rates and the US has low interest rates, if you're buying Aussie dollar versus the US dollar, you're going to receive a positive amount because Aussie dollar is technically has a higher interest rate. Therefore, you're going to have a higher yield on those pairs. That's a good question there. Sorry, what's data feeds? Why are they not the same? That's a great question. So the reason that data feeds are not going to be the same from broker to broker is because Forex is not a centralized market. There's not one price for the Aussie US. There's not one price for the euro. It's whatever the banks or liquidity providers are providing for those prices. So every single broker is going to have different prices because that's essentially their own price or their liquidity provider's price. So that's a great question, I would say, Frank. That's one thing that you need to keep in mind. So you can't always say, hey, my price was hit here. Why was it not hit with this broker? They're two completely separate prices. It's apples and oranges a lot of the time. And another thing that I was like to touch on when it comes to trading and who's on the other side of your trade, or stop outs and slippage and so on. As I said, if I'm slipped on a price and I don't believe that the trade should have got to that level, I'll reach out to my broker. There's a lot of times where clients have come to me and said, hey, Ben, this spread blew out to 40 pips over the weekends. What can you do about this? And I'll say, hey, no worries. I'll check with our liquidity providers. Liquidity providers will come back and say, yep, no, that was a valid price, but I'll still refund that trade for that client because I believe it to be unfair. So again, it comes back to speaking to your broker and asking them as many questions and getting as much information about trades as you can, because they might feel that the price was unfair as well, and you might be open to a refund. Can one talk to a broker about lowering commissions? Yeah, absolutely. I mean, we have a VIP type package, and it's usually a case-by-case basis. So it's something that you should, again, speak to your broker about. Typically, if you have $50,000 or more and you're trading decent volume, then you'll be open to having a commission reduction.
Just to hop in real quick, if you notice one thing Ben is saying over and over again, it's communication, communication, communication. And that's the biggest thing that we always emphasize when it comes to picking a broker, or even just any other different business options, is you want to have good customer service. You want to be able to communicate with an actual person. And I've been with people in the past where, I may be having a problem with my trades, or a question, or power went out and the stop loss didn't go on. And I try to call in for damage control and I get stuck on a computer where it's like, press 1 if you don't have a stop loss and the market is going against you and stuff like that. And when you're dealing with money, that's not a situation you want to be in. Jason Graystone mentioned this earlier about the trading plan. One of the most important parts of your trading plan is having that emergency contact list. So when you're doing your broker research, it's, at least for me personally, it is very important that I can actually be in touch with an actual person, have an actual conversation, and get actual answers. Even if the answer may not be to my liking, the fact that I'm not stuck with a computer is massive to me. And that's one of the biggest things that I personally look for when I would do broker research, that customer service, that relationship.
Yeah, I couldn't have said it better myself, Akil. That's so important, and we have 24/7 customer service now. It's not just 24/5. You know, you can reach us on the weekends, and if something does go wrong, and it's noted down, at least you've got a record of it, and I can go back and look and say, oh, hey, you know, this person jumped on live chat at this time. They couldn't get into this trade. We'll fill them at that price. You know, we spent years working on our online reputation, and we have over 2,000 5-star reviews online across the board, and that's something that's is honestly really personal to me, because I fought to get a lot of those reviews, and we would speak to any of our clients who would give us bad reviews to change their perception on us, and as I said, to really try and change the perception of how brokers are looked at. Stop loss is market order if it slips beyond. Yeah, well, that's actually perfectly explained there, Charles. It's the best analogy that I like to relate it to is a share price. You know, if you want to enter into a share price on the weekends, and it's at $50 for Netflix as an example, but then on Monday it opens at 55, you can't enter that price at $50. It's $55 is the new price. So when it comes to getting in at a price, sometimes you might not get the best price you're asking for, especially if there's low liquidity, especially if the markets are moving fast. You know, if it's a news announcement, I've seen prices go from 60 pip moves within less than a second. So obviously there's no fills within there. Bobby, I was your main contact. Well, that's good to know. Hopefully that's good to put a face to the name. Hopefully you end up trading on that account, mate. That'd be great. Is there a difference in liquidity between small broker or big one? That's a really good question. I guess it can depend on who they're using. So we have 5 or 6 different pretty large liquidity providers, and we're actually licensed through, in all honesty, we're licensed through another broker down in Melbourne, as here in Australia, it's very difficult to get your own license when you're starting out. So we were licensed through another broker down in Melbourne, and they take care of our liquidity, which has I've never seen any issues with trades being, requoted or anything along those lines. So I think there might be differences in liquidity when you're looking at very large brokers. They might have 10 or 12 different liquidity providers on, but most of the time there's very deep liquidity, and you don't usually have to worry about it. Tony says, as a trader, you must be aware of spread changes at certain times of the day and over the weekend. I couldn't have said it better as well. That's something, I'm always aware. If I'm in a currency pair, I'm aware of the news announcements that are coming out, and how that's going to affect my trade. That's something you have to be real careful with. Chris, what is a liquidity provider? So a liquidity provider is essentially a bank. So, your Morgan Stanley, your Deutsche Bank, those type of people are some of the main liquidity providers, and they basically are providing a price to trade on. They're the ones who are determining what the bid and ask is, and they will be the ones essentially clearing those trades. How will our broker account money be protected if there is a banking collapse? I did run over that a little bit before, Pablo Escobar, but that's essentially, it comes down to regulation again. So here in Australia, we're governed by the Australian client money laws. So ASIC, which is our regulatory body, the Australian Securities and Investments Commission, is very strict. They do reconciliations with all brokers. I believe it's once a month, to make sure that funds are being kept in the right way. So if anything, again, is to happen to us, then all of the funds are kept separate in a segregated account. Frank, you wanted to know about leverage risk. So the simplest way to put it is, the higher the leverage you have, the more notional value you can have with outlaying less. So say, for example, I'm on 1 to 100 leverage, which is the standard leverage. That's what I like to trade on. That's 1% margin needed. So that gives you the ability to trade $100,000 of currency with only needing to outlay $1,000. Now on 1 to 500 leverage, that's 0.2% margin. So you only need to outlay $200 to have that same notional value. So with $1,000 in my account on 1 to 100, I can have $100,000 worth of currency. But with $1,000 on 1 to 500, I can have $500,000 worth of currency. So it is more risky because you have a much higher notional value in the marketplace. So it's not to say that high leverage is definitely risky. It can give you more of a buffer, but again, it all comes down to managing your risk, and managing your risk is the most important thing when it comes to trading.
And real quick, just to pop in, because we get that question a lot about leverage, and then there's been different leverage changes over the years in different places, and people always ask the question, well, how does that affect my trading? if you remember what we talked about earlier in these sessions about, let's put it like this. Something that always stuck out in my head was this quote: "Good traders are great risk managers," meaning that we always know our risk, we always control our risk. We should never be in a position where we lose 10 trades, we lose 20 trades in a row, and we blow our account. And if you're using proper risk management, the leverage isn't as important as you think, right? You don't need 500 to 1 leverage, because you're not, if you're trading the right way, you should never be using 500 to 1 leverage. So leverage is important. It does give you, it tells you your margin, but it all starts with proper risk management techniques. And in my opinion, we should always be trading small, and small enough where that leverage never really comes into play.
Yeah, absolutely. And I've seen a lot of profitable traders, and I've seen a lot of losing traders along the way. And I can tell you, all the profitable traders have the same thing in common, or the same few things in common, which is they all manage their risk accordingly. They are extremely disciplined when it comes to sticking to their strategy. They don't let losing trades put them on tilt and go off on tangents. They just move on to the next trade. So it really comes down to managing your risk and sticking to your strategy. Do we allow multiple accounts per person? You can have multiple accounts per person. That's no worries at all. We accept Singapore, but not Japan. Japan is a tricky one, similar to the US. The type of poker players the casinos hate. Yeah, exactly right. So low liquidity, Charles said there, traders want to be placed at prices. Yeah, that's a great point there as well. Low liquidity times, it's as simple as it is. There's low liquidity. There's not as many buyers and sellers, so those prices move further apart. When there's not as many buyers and sellers, the cost of trade becomes higher. So during normal trading hours, that's when you'll see spreads as tight as possible, when there's nothing crazy going on, and that's going to be, usually your best time to enter the trading market. We don't accept Iran, sorry. We do accept Barbados and South Africa, to Shama and Tyson. If a world war breaks out, how would markets respond? Well, I think you would see a fair bit of chaos in the markets, to be honest. You would see a lot of wide spreads. You would see a lot of fast movements. You would see a lot of slippage. You would see a lot of very big spreads. I think that would be simple, but there would also be a lot of opportunities, I believe, in those times. Are there any withdrawal restrictions? No. I mean, no. That's a great question, actually, Terence. And it still blows my mind that I get asked that question, probably on a weekly basis. Someone says to me, "Hey, can we withdraw funds?" Which is, it's bizarre to me that people have to ask that question, but it's obviously because there's so many poor brokers around. Those funds are your funds, and you can withdraw them anytime you like. It's your money in your trading accounts. You can take them out whenever you like. The only technically restriction that we have is the fact that the funds just have to be sent back to the original source you've deposited from. So if you fund with $1,000 via credit card, we would send $1,000 back to your card first, and then any profits are sent to a bank account. And that's just to tie in with anti-money laundering laws and so on. So when you say normal trading hours, we're about the Euro and US sessions, I would say, is when you're going to see the tighter spreads. So for me, being here in Australia, unfortunately, spreads aren't always the best during my day, because the US session doesn't open up until about 8 at night, and the European session is about 5 p.m. for me. So for me, being here in Australia, spreads aren't always as tight until later in the evening. But for you guys, depending on where you are, of course, then they should be pretty tight during those hours. So Tony, you said a few years back it took a month to withdraw funds from a broker. Do you know if they were regulated or where they were regulated? Are they a well-known broker, Tony? Okay. Look, sometimes, again, I'll be very, very honest here. Sometimes we do have issues with withdrawals. So say, for example, we go to send funds back to a card. I saw someone say, what if it was expired before? When we do that, we're not actually doing this refund on our end. We process it through a banking portal, and they process the refund to a card. If it's declined, those funds go straight back into the trading account, and there's extra policies that need to be followed there, because we need to work out, one, why it was declined. Sometimes it can be a stolen card, and we have to go through compliance and make sure everything is kosher before the funds are sent back. But were they giving you any reason as to why it took so long, Tony? When I mean, my profit won't let me withdraw more than the amounts I put in. Yeah, so Terence, gigantic red flag there. again, those are your funds. That's ridiculous to not allow you to withdraw your profit. That's your money. You should be able to take that out whenever you want. Red flags to watch out for. Well, I tell you what, some of the big red flags are things like no deposit bonuses, leverage up to 1 to 2,000 I've seen. These kind of things are usually just things to grab accounts quickly and to make sure just to get people to deposit and lose their funds. They're not serious about trading, offering 1 to 2,000 leverage or no deposit bonuses. They're obviously there so that you trade, lose that no deposit bonus, and then deposit your own funds. That's just a little grab to try and get as many clients in. They don't care about having clients on board for a long time. Whereas our average client lifetime here at Blueberry Markets is about 9 months, which is well over the industry standard. So again, that's another good question to ask your broker. 90. Sorry, Kian, I'm not too sure what that means there. Tony, you said they were absolutely useless. It sounds like they were useless. You don't have to name the broker, but were they regulated in the UK? Sorry, Akil, go for it.
We often say the 90. We often say in here that 90% of traders lose 90% of their money in the first 90 days. So to hear that the average client is would you say 9 months? For some people, that seems like a short amount of time. That is.
But yes, let me tell you,
months in trading without going broke, you're doing something right. You've made it out of that failure category. You may be in the wounded crab category, like Jason Graystone talks about, where you're kind of just breaking even. But most of the failing traders, they're gonna be done. They're gonna blow their account within three months easily.
Yeah, I've done that many times myself as well. I think it's it's a rite of passage almost, unfortunately. But yeah, it's like I said, 9 months. We're very, very proud of that, to be honest, and I think that does come down to a lot of aspects. Customer service is important, and we really do try and look after our clients. Tony, we do have IB agreements. If you're based in the UK, you can set up an IB agreements here. The only place we can't really set up IB agreements, funny enough, is in Australia, unless you have an Australian financial services license. But we cover what markets we cover. Yeah, absolutely, Terence. So we cover, we've got, I believe, over 50 Forex pairs. We have all the top indices, so, the Dow Jones, S&P, DAX, and so on. We also have gold, silver, the 2 oils, Brent crude, and West Texas Intermediate. We've now actually just brought on 50 US shares. So some of the 50 US shares like Netflix, Facebook, Google. So that's something we're really, really excited about. That's come onto our MetaTrader 5 platform, and that's been offered just in the last week. So if you want to check that out, that's definitely worthwhile. If a broker is limiting you to 30 to 1, Dwayne, I'm guessing that they are a UK broker or even an Australian broker now with the leverage changes. So I'll touch on that a little bit. Here in Australia, ASIC, our regulatory body, is following the rest of the world, Europe and the US and so on, in terms of maximum leverage. So 1 to 30 will be the maximum leverage for Australian clients, unless you're listed as a sophisticated investor. Which is relatively easy. You just have to go through some extra KYC and some extra, sort of product knowledge. But we have our license in Vanuatu now, which means we can accept clients and still offer 1 to 500 leverage. And as scary as that sounds, it's very important to us for our clients to know that we're still regulated by ASIC. Everything will remain the same. You would still deal with people here in Australia. You'll still have your account manager here in Australia. And it's even more important now for us to look after our clients and do the right thing by our clients, having that overseas regulation. It's not just, hey, we're regulated in Vanuatu and now we can do whatever we want. It's really the complete opposite. It's now that we have that extra license, we have to make sure we're doing the right thing by our clients and keeping everyone happy. As we've got 2,000 5-star reviews. We have no interest in making that go away whatsoever. Any future thoughts on the horizons, cutting edge? Where do you see what's going? What do you want to see? Oh, what a great question, Charles. I really appreciate that one. So I'm actually really excited about the Forex markets, to be honest. This last year during COVID, as much as I hate to say it, it was a phenomenal year for us. Forex was just going crazy. We had our best year by a long way. more and more people are getting into trading. So I don't think I've ever been more excited about the Forex markets, and I've been working in them for 11 years. I think regulation is a good thing. These regulations of strict leverage means that new traders can't come in on 1 to 500 leverage and blow up their accounts right off the bat. It means that they're going to learn on lower leverage and have less painful lessons when, if they do blow up an account, it's not going to be nearly as bad. 1 to 30 is 3.33% leverage or margin needed. So it's not that drastically different to 1 to 100. Just means that you just need to outlay a little bit more in margin. So great question, Charles, but I see things keeping moving forward and more people getting interest in trading. And hopefully there's not going to be too much more regulation, because it can get a little bit crazy at times. I know the US was sort of one of the first when it came to that with the Dodd-Frank a little while back. But yeah, all in all, I'm very excited about where it's going. No worries, mate. So the input, oh wow, the future impact talks of a single global currency. I think that's quite a way off from now. I mean, I don't even know if we would see that in my lifetime, at least. I'm not too sure if we will, but you never know. I mean, with these cryptocurrencies coming in, and banks and investment banks are now starting to take them more seriously. It's definitely a conversation that needs to be had, but I don't think in our lifetime, there'll ever be a single global currency. I think that's a very, very, very way off. Yes, Andre, world peace will have to come first. That would be great, wouldn't it? Sorry, Terence, you said, Mr. Pardon, how much leverage on a new account? So you can have whatever you want, but I would recommend not going higher than 1 to 100 to start with, at least, and make sure you're comfortable on the demo, and make sure you understand what that leverage means. Make sure that you understand when you enter a trade, how much margin that's being used, and how much leverage percentage you need to keep. So you want to make sure that margin percentage is always going to be above 300-400% or whatever your risk parameters are. Just make sure that you're aware of how that leverage works if you are going to use 1 to 100 or more. Exactly. Yeah, absolutely. I mean, they're masters at risk management. They're not going to lead you astray when it comes to that. So yeah, you're in very good hands there. Yeah, and very well said. Very well said, Charles. Just because you have higher leverage doesn't mean you should be using that. When should you use a VPS to trade? I would say usually if you're using any kind of automated systems where you need MT4 or the platform to be running 24/7. So if you need MT4, if you're using an EA or even trailing stops, if you're using trailing stops, then the platform needs to be running for that to work. So you don't necessarily want to have to leave your computer on all day. You might want to use a VPS. And ask your broker about a VPS as well, because most of the time they'll cover the cost for you. There'll be free VPSs that you can use as long as you're trading, 1 or 2 lots a month. If you're actively trading with us, you can have a free VPS. So that's fine. Exactly, Akil. Sorry, I should have clarified that. It's basically another PC that you can log into from your computer that's always connected to the internet and will always be on and running.